a bounce underway. The Fed, of course, came out with their minutes yesterday, and that seemed to please the markets because they are indicating that they're not going to be hiking rates until we see a global turnaround in the economy. And so for the markets, that means that the rate hike might be well off into next year. Markets have been schizophrenic in the last many weeks. We've seen that in the market, the charts and the volatility, etc. So we shouldn't be so surprised that the markets can do one thing for a particular reason. One day they'll go up for that particular reason, and then the next week they'll go down for that same reason. And that's just the nature of the markets, that the way they're very news-driven and schizophrenic these days. But fortunately, we focus on our stocks, and they tell us what we need to do in terms of going long or short. And that's true in any market. That doesn't just have to be this type of schizo market. I mean, that's never been more apparent than in some of the most critical turning points in market history, when all seemed lost, and then within a day or two, the market would turn on a dime. And as long as you're watching your stocks, you saw them hit their buy signals, and then you started to accumulate positions. And that happened like clockwork every single time, I can say, since the early 90s. And it's just about paying attention to your stocks. You have your watch list, you run your screens, and that watch list builds perhaps over time. And then when you start to see the bear markets, because we used to have prolonged bear markets back in the day, when you started to see the bear go into hibernation, you would see that in the way of your own stocks that you're watching hit actionable buy points. And so without question, I would just like a robot start buying positions in various stocks, and then before I knew it, if it was a legitimate turnaround in the market, I'd be fully margined out, sometimes as soon as 2 or 3 days from being completely in cash. So in other words, I acted very quickly, provided that my stocks were telling me to buy them. So I think that's how we all operated back then and today. And it keeps our profits intact when the markets do squirrely things. I mean, this year has been one of the most challenging markets, as we've seen in the sideways action of, say, the S&P 500. And only recently did it take a nice spill. And now we're seeing exaggerated volatility, which is what we're used to seeing after the markets take a nosedive. So to me, this is all pretty normal in terms of the way markets should behave. And there's really not a whole lot to be said. We've had a few stocks that hit our trigger points this week. Not a whole lot. Most of them came on Monday, and they're doing pretty well. You got EPAM, and then you've got let's see, what is it? The FLTX. They're doing as they should after a pocket pivot. We have one that's this LGIH. It's a home building stock. And you need to be careful about this one because we put it on the list.
Hey, Dr. K. Dr. K,
Yeah.
you're on the NASDAQ chart there. This is on the right side is the one you want to be using, this one here. So, because this will show,
one, okay.
yeah, this will show NASDAQ volume on the left side. This one will show the actual volume for the stock.
Okay, great.
Okay.
So I'm going to put in LGIH on this larger chart. And we put it on a list on the 5th of this month. So as you can see, it's made some good moves. It's been up every single day. And this is where you might think, okay, maybe I should start taking profits off the table. Because this is a market where you got some profits quickly. You should take some of the profits off the table in context with the chart. And certainly in the context of this chart, this thing looks like it's getting a bit extended. Yeah, the home builders are a very powerful group. They're in the top 10 of industry groups, but still, there's nothing wrong with taking some profits at that kind of juncture. You've got then these other ones like EPAM that we put on the list. I think that went also on the 5th of this month, and this one to me, it's put on the list on this day, and it looks like it's running about normally as it should. There's nothing to be done. It's not ahead of itself. It looks like it's consolidating its gains. And then we had, what was that one, FLTX. And that one also looks like it's acting like it should. It had that big pocket pivot day, then it consolidated, and now it's moving higher. So it looks fine. And again, there's nothing pronounced to be done with those. I mean, if you got positions, then just sit tight until they do something wrong. That is, if they hit your sell stop, or if they get ahead of themselves, then take your profits. Outside of that, we've got the oils and commodities that are trying to rally. The market is watching these like a hawk because they've been in concerted downtrends for quite some time, and they're still in downtrends. I mean, this is a little blip on the overall chart. Here's the weekly of the USO. You can see that the downtrend still seems to be quite intact. The global economy is still fairly ill. So if we're to believe that the economy globally is going to stay stuck, then I would say that the demand for commodities is going to stay soft. And things like oil are probably going to go, roll back over again and maybe continue their downward move. And the same goes with, silver was, let's see, look at SLV. That one had a few days to the upside, as did other commodities, but overall this is still in a fairly convincing downtrend. It's the weekly. Yeah, I mean, it's very sloppy in there, so there's not a whole lot to be done. Now, other than that, this market looks like it needs to consolidate these quick gains that we've seen, and again, wouldn't be surprised to see some sort of backing and filling in the majors. We could get what we saw in last October when the market went just straight up to new highs, and yeah, it could happen again. The market likes QE, and I guess it's more convinced now that Yellen has, the Fed has basically said that it's going to be very, very careful about when they do hike rates for the first time. So we could have a few more months of this kind of action, and we're seeing central banks around the world are, of course, very easy about their monetary policies as well. So all these central banks, of course, act in unison when things are like they are. So follow your stocks, and with that, I'll turn it over to Gil.
Okay. Here's what I'm looking at. In my view, it's pretty obvious that the market bottomed out, at least short-term, last Friday. Let's look at the NASDAQ here. Whoops. I've been using stockcharts.com, so that's why I get that. And when you had this reversal here, this was last Friday. To me, that was also, I think, a follow-through day for those who followed that. But I could see that a lot of stocks that I was shorting were coming down or starting to bottom. So I went long a few things, and we get a rally. And now we're at the 50-day moving average on the NASDAQ, and S&P is just a little bit above the 50-day. But you'll notice that it is running into this peak here. So I actually think you're in prime position for a pullback. And if you were trying to go long this market, the time to go long this market was several days ago, if you're going to do so aggressively. And we've had some decent moves, but the action in individual stocks, I would say, is pretty erratic, and the things that work the best tend to be the things coming off the bottom. If we look at oil, I think there's a reasonable chance that oil's bottomed and may start turning back to the upside. You're seeing here's this pocket pivot coming off this low. This is actually a pretty constructive pattern. It looks like it's trying to go higher. My view is as long as you can hold the top of this range, if you draw a line across these peaks here, you get a trend line breakout. And as long as you hold that, I think oil will probably try to move higher. That's what it looks like to me. Now, that's going to drive the oil stocks higher because you've seen, and let's just pick a random one. Bang, I always like that symbol. Yeah, let's look at how that's rallied and broken out of this range. But you can see it's kind of in a nondescript position on its weekly chart. So, where do you jump in on that? So the other day on Wednesday, I was looking around, saw some news that U.S. Silica Holdings had delivered a record train load of 180 cars full of white fracking sand. And I decided to take a shot at U.S. Silica. That was on Wednesday. Stock went up 10%. yesterday, and it's rolling up again today. And I notice you have 1, 2, 3 5-day pocket pivots in here, and that's a cluster. So this looks like it's one that may be trying to turn off a deep position in its pattern. I mean, this is kind of what you're getting in this market. It's just this deep doo-doo type stuff, and some of the best moves occur and stuff like that. If I look at something like an FLTX, oh, well, now I'm doing that. I'm going after the wrong chart. Let's go back to this chart. That's a breakout. To me, I don't know, a breakout should be sold into. So I would just sell into this move. And you're kind of running out of gas here a little bit, it looks like. So for my money, if I bought it, if I had bought, say, this, you know, the only move here to buy is this pocket pivot when it breaks out. And then you're buying up here. So you've got a whole nother buck or so on the stock, 2%. To me, that, you know, are you going to make big money on this stock? Are you going to make big money in any stocks? And that's really the question outside of, you know, a few quick draw McGraw type trades. That's all I'm doing. I mean, I get 5-10%, if I'm lucky 15 maybe, you know, playing the fit off the bottom a couple of weeks ago here, well, actually almost a month ago. Boy, time flies when you're having fun, huh? But this kind of move, you know, you get now, it just kind of flutters out and fizzles and comes back in. It's undercut the lows now. Is it going to head back higher? I don't know, but you know, that's what you're getting. And my personal view is, if you think you're going to buy breakouts, if you think you're going to buy older names and you're going to make big money, I think you're pushing a little bit here. I don't see this environment as all that ripe from the long side. It's just mostly a back and forth traders market. You know, this global payments, this is actually a nice viable gap if you got in early, because now it's pretty extended and maybe it pulls back. But, you know, that's what you're seeing, and it's post-earnings. Another one that had a nice move was Acuity Brands. It had a pocket pivot actually off of the 200-day moving average. Now, that's a bottom fishing pocket pivot, and it looks kind of extended when it's all said and done. But it continues higher, and this kind of looks pretty, it almost looks like a head and shoulders, and you're rallying right up into this area. Maybe it rolls over from here. But to me, that's what you're getting in this market. And if you're lucky, you catch something like this. I know there's this other one you were talking about, the LGIH. That's acting okay, but it's relatively thin, and it's up 4 days. So like he said, you know, you're breaking out, maybe you take your profits on this. Some of the other builders, come on, baby. If you look at this has been rallying, but it's right into the 50-day. And if you look at this pattern, this is kind of looking like something like a head and shoulders. On the daily, it's like a fractal head and shoulders, and now you're right into the 50-day moving average. So if we start asking the question, what are the stocks telling you, I see a lot of them rallying into potential resistance. And so I'm very vigilant. As I like to say, I have my short selling antenna up right here, and I'm watching to see what happens right here, because this could be the time, or we could be approaching a time to pounce on the short side. And at the same time, though, I wouldn't conclude that we're starting some bold new bull market, because you're not really seeing anything fresh in terms of leadership. You're not seeing any hot new IPOs that can drive things higher. You're seeing very, very little in that regard, and that makes me suspicious, unless we're just going to remain in this choppy and sloppy sort of QE-driven market, where if the Fed confirms that they're going to keep all this liquidity in the system, the market rallies. You know, if the economy seems too weak, the market sells off, and you're just very news-oriented, and you're not really going anywhere. So I tend to think that the idea that you're going to find something and make big money on, and really that's the main problem to be solved in any uptrend, is where are the names that you're going to make big money in? Where are they? Don't really see them. There's some old stuff coming up. Are they going to have big moves? I don't know. So let's go through some names. So I'll just take away a couple things. In a position to turn back here, maybe we go a little bit further. Maybe we go up to this high on the NASDAQ. S&P, though, is right at this high, but it could go further up to the 200-day. So, yeah, we could continue to rally. But I think you want to monitor this rally, because there could be a short sale opportunity that is perhaps of a greater magnitude than what we saw back in mid-August. And I made a ton of money on that move, and that's what I'm laying for now. So I'm not all that excited outside of taking some quick trades in some stocks. You know, like the Silica is nice. Shop is nice too, but you really have to buy this on weakness. If you're trying to buy, like yesterday was like a pocket pivot breakout, but it's a little extended from the 10-day, but it qualifies since it's a breakout. and you want to buy it coming in. You don't want to be buying it, chasing it on the upside. So, you have to stick to this idea of buying into weakness rather than chasing strength, because you don't know when they're going to pull the rug out on you. Somebody asked, you talked about PANW recently. Today, do you think this is constructive action with the undercut of yesterday's lows? Let me take a look. It's underneath the 50-day moving average. It's kind of in no man's land here. You picked up volume yesterday, and what I thought was pretty feeble is the fact that the stock remained weak throughout the day, even as everything else was rallying. So I don't know. It hasn't undercut any lows. It didn't. I would want to see it undercut this low, not this low. So that to me doesn't really look like it's in a position to be bought. It looks like it's kind of in no man's land, and a rally up into the 50-day might just be where you want to short the thing. So someone else asks, Chris's mic sounds very tinny. Just me? No, I noticed that too. I don't know. Are you using a new mic, Dr. K?
No, same setup.
What?
Same setup.
Same setup. Okay.
Nothing's changed.
It's just coming across the. It could be the internet. I don't know.
Yeah, that's the first time I've had that complaint.
It's better for you to be tinny than to be going in and out, so I'll take that any day. Let's see. You know what? I think what I want to do here is I think I've got all my lists over here, such as they are. They might have some names that don't belong there, but let's just run through all these. We'll go this way. Wow, something's staticky there. Dr. K, you there?
Yeah, can you hear me?
Yeah, you might want to mute your mic because you're sending in a lot of static. Okay, here's JetBlue is having a pocket pivot. It looks like my HCS investor system is projecting a pocket pivot for JetBlue here, so that may be what you get coming up to the 10-day and the 20-day. The airlines are acting a little bit better. I noticed Delta was trying to come out, American Airlines is trying to come out, but you can see these are also kind of in funky positions. LVS, I'm sorry, what am I thinking? Love. That's trying to break out. So, the airlines, maybe, you got to make big money in the airlines. I don't know. And good luck. That's all I would have to say. But in any case, let me get back to the top. This would be some of the stocks I'm watching on the long side. Here's FIT. Now, FIT's trying to come up. We looked at that. You undercut these lows. So when I'm looking for an undercut, that's what I'm looking for, a prior low, not yesterday's low. So if you want to go after Palo Alto Networks on the basis of you're seeing it undercut yesterday's low, I guess you could, and then use that as a stop if you think it's going to come back. It may. Expedia is another one hanging in there right tight along the 10-day, 20-day, 50-day, so maybe this is going to try and come out. Cambrex is kind of a doggy stock. I've been watching to see if this is going to round out and come around. It hasn't really done anything. You notice it didn't really rally with the market. Here's Palo Alto Networks. And it's just sitting under the 50-day. Here's Facebook. It's just hanging along the 50-day. Yesterday, I've been long this stock, and yesterday it was like drifting in and drifting in and drifting in. The volume was light, and it looked like it was going to blow up. And then finally, after the Fed meeting minutes came out, the stock turns back to the upside. Now you're near the highs of this little range. Maybe you reverse back to the downside. But you can see there's really nothing, what I would call definitive or decisive in terms of the action here. It's just back and forth a little bit here, and you can see the breakdown at the end of last month. That didn't look so great. I mean, that was pretty ugly actually, and it looked like we were going to head for another leg down. This is going to head lower, but it found some support after undercutting these lows here. You see that, and then you turn back to the upside, and now you're just fritzing around here, and I'm not sure what that all means. So it's not necessarily showing me that maybe it has another run for the highs, maybe not. It's holding in okay, but some support at the 50-day line. Yeah, maybe it will go higher. So maybe that's a trade to try. I don't know. I'm also looking at it as a short sale potentially. Skechers. This one was looking good for a while, and it's failed. Now it's starting to look like a top. If we look at the weekly chart, not really a head and shoulders as much as it is a failed base. And the breakdown through the 50-day now would set up rallies either into the 20-day. From here, I'd use the 20-day probably, or the 50-day, not the 10. Would probably be optimal short sale points. So the way I look at them. A Biomed's another one looking pretty ugly. Here's a failed base, but it's not in any short sale position. Amazon, it goes up and down and up and down. It's like Facebook. It drops below the 50-day, it goes back above the 50-day. It drops below the 50-day, it goes back above. So, you know, it's just kind of slopping back and forth and nothing really resolving itself. Albany Research has been a dog. And this had a pocket pivot up here, I think. Where was it? Right here? Yeah, right here. And then it died. Of course, all the biotechs have died. Dicom broke down. It's trying to come back, but it's not really any buy position. EPAM probably extended, probably sell into it. Google, now known as Alphabet. So I guess I have to call it Alphabet, right? It's just chopping back and forth. It is tightening up somewhat. If you look at it on a weekly chart, though, look at that. That's just really sloppy action. And that tends to indicate that you might be in a topping phase, okay? Not a phase where you want to be getting big, fat, and long the stock, because on the weekly chart, that's just wide, loose, ugly action, and this doesn't look that great. Now you're coming, if you draw a line across these tops here on the weekly chart, you're reaching a point where you're kind of broken out above them, but if you just use these three, you're kind of running into that, what do you call it, declining tops trend line. And it's just, you know, I don't see anything here that I would want to buy, although it looks okay, like it might want to go higher on a trading basis from here, but to me that's not all that clear. So let's keep trucking on down the list. Luxoft, this is a thin little name, but it seems to act okay, but it's volatile, and if you look at the weekly chart, it's had some spin outs, but it gets support. I don't know who it, you know, this is Capitulation Monday. It's hard to sit through any of this kind of stuff in a stock that trades 246,000 shares a day. But, you know, this is a newer name. It's already had a big move, though. To me, vulnerable to a breakdown, you know, more than anything else. So let's keep going. Paycom. This is one that looked like it wanted to go somewhere up here, and then looked like it might come back, and now it's back near the highs. So there's no buy points in here. All you do is buy it off the 200-day. Close your eyes and you buy it because it looks like crap. And that works, you know, like buying the Silica on Wednesday. That worked, and it looked like crap. And I'm thinking, why am I buying this? I didn't really have a good reason outside of the fact that oil was moving up. You know, I was saying, okay, if oil breaks down, I'll sell this thing, and then, you know, and bail out and stop myself out. So let's see, Ulta Salons is chopping around. You know, it's not going anywhere. So this one broke down. I wouldn't be surprised if it rolled over again. It's hard to tell what it's going to do. I mean, it's just not all that exciting. Starbucks, I've had it on my short list, but it's not really acting like it wants to break down. But what I see here is sort of a funky late stage base, and I've just got it there because it is a big stock and it's been a big leader. And I'm thinking if the market blows at some point, this thing's coming down. This will be the next one to come down, because you'll see stocks break down in waves. Okay, you go back and study any bear market top. The first break off the peak has a whole set of stocks that blow apart, and a lot of times there are stocks that have already blown apart, like the oils were blowing apart long before we topped out in early August and rolled over. And so now, you know, you'll have different waves. So now you might see another wave of stocks. It could include things like Facebook, Starbucks. So I'm watching these, and that's why they're on my short sale watch list. Headwaters, you know, straight down, straight up. Okay. Fortinet. This can't decide whether it wants to be a short or a long, but again, it's a funky pattern, breaks down, going nowhere. O'Reilly acts well. I'm trying to, is this my short sale list or my long list? I think this might be my long list. That's pretty sad, isn't it? ORLY hanging in there, but is it going anywhere? Maybe it needs earnings. We're watching the market now coming in, Dow up 20. CMG trying to go somewhere, but not really. And if you look at it, maybe it's just setting up to fail. I don't know. It's, you know, stalling and churning in here. It's kind of no real upside volume. You get some support on the pullback, but Just not, nothing definitive. Under Armour comes down, goes up, comes down, goes up, and now it's sitting around. I thought it was buyable yesterday off the 50-day. I did buy some. But, it goes up a buck or two, I'll just puke it out. I don't have that much conviction in anything here. FireEye, that's a piece of garbage. Just keeps going lower. Avago, that was a short on Monday. Ran into the 50-day, boom, going lower. Kind of in no man's land right now, but this is turning into a clear head and shoulders. Here's a right shoulder now that it's formed. So, ugly. Milacron was a new issue I was watching. Looked like it wanted to come out and it's failed. There's GPN. We looked at that. Solar Edge, I think, I've been watching this, thinking that, okay, you had a big move, now you break down. Now, if the market were to turn, maybe you'd have a pod that would form and it would turn higher and head back for the highs. No such luck yet, although it was trying to hold tight. Now you just ran into the 50-day roughly today, and now you're rolling back. AXON, that's another one. That's a dog. Plants, another dog. Not really doing anything. Dexcom, another dog. Looked good. See, there's your breakout, and it blows apart. Now it's at the 200-day roughly. So you're going to buy that and make tons of money. Sure. On the breakout, yeah, sure. Good luck. Netflix, that's a pocket pivot, but this one is bizarre because the other day, actually yesterday, it was down at 102.60 at the lows, and I'm watching this thing bust through 103, and I'm thinking, holy cow, that thing's a short now. Fortunately, I didn't short it, but I'm looking at it and I'm thinking this looks like crap, and very surprising, it just couldn't hold up and blowing through all of the moving averages, the 50-day, the 10-day, and the 20-day, and you can see that on the chart. And then it reverses on news that they're going to raise their subscriber rates a whole $1 per subscriber, which I think, what do they charge now? I remember it used to be $7. We still get it, but I never check it on the credit card. So mostly my kids watch it. They live on Netflix, actually. They don't know what TV is, so which is nice because I get to have my TV all to myself. In any case, stock was reversed on a big outside reversal, heading back up. Looking like it wants to head for the 120 level or higher. The earnings come out next Wednesday, though, so are you going to sit there with it? Hard to say, but if you get a good trade out of it, if you saw that happen yesterday and you jumped on it, you can get a few bucks out of it, and it might work. So somebody's asking about MXL. Well, it's a cheap, thin stock, trying to break out of a kind of a steep cup and handle. That's like almost pod-like. I'm not. It's a breakout. So what do you want me to tell you? That you should buy it? Go ahead. If you want to buy it, you can use the standard IBD rules. And if it breaks down below the breakout point, you're out. Okay. So, but I don't buy breakouts. If you desire to do so, you may. That's up to you. But know where your stop is. So you can do whatever you want. On the long side, here's Shop coming in. So pocket pivot yesterday, yeah, I see it, everybody sees it, it's obvious, and I'm not going to buy it. I actually own the stock from down here, and I sold into that move. I bought it down here, I sold into this move. And I've done this twice now. It's coming in, maybe I'll buy it back. I don't know. Infinera, this is another one that was looking good for a while. Now it's looking like a head and shoulders on the weekly chart. See that? Let's make it bigger. You see that? Everybody see that? I mean, okay. Yeah, I'm going to buy that. Here's Shaq. Makes me think of Shaquille O'Neal. Now, that's a piece of garbage. I kept thinking maybe you're going to have a pod form here. It never happened. It broke down, which I think tells you how feeble this market is in many ways. It's just kind of junky, and stuff runs up, it runs down. And okay, GoPro. I put this on here because it looks like garbage, so maybe it rallies. There's some talk that Google's going to buy them, but who knows? If it gives me 5 points on the stock, I'd take it. Save, short sale candidate, but it's broken down considerably. It's around. I mean, look at this. I was shorting this one a lot sooner, I think, down up here, and got some of these moves on the way down. But it may be trying to turn now. GoPro is also on my short list because it's been looking like garbage for so long. Amberell looking like garbage. Nowhere to short it. Illumina, way down there. Splunk trying to turn. Twitter, way up there. You know, Prince Al Walid bin whatever his name is from Saudi Arabia announced he bought a 5.46% position, and that sent the stock up. I'm wondering whether it's a short. I've actually put some out right here. It got up as high as 31.30 up to this high, so that looked like a spot to test, maybe using that high as a stop, but we'll see what happens. I played with this the last couple of days on the short side, and every time I just go away. Who knows? Maybe it breaks down now, so I don't know. Somebody says Amazon looking perky. I don't know, whatever you're smoking, I'd like some of it. I mean, to me it just looks like you're going back and forth, so I don't know what perky means exactly. When it comes to stocks, if it just means it's up on the day and that's perky, then I guess that's perky, but it doesn't look that exciting to me. So anyways, play, someone's asking about play. That's on my buy list too. But you know, here's a pocket pivot here, and you had a nice move. So you had the pocket pivot, then you got the pullback to the 50-day. So I guess that would be the place to buy it. Now it runs up to the highs. You want to sell into that, and here it comes again, coming back to the downside. It's a thin little stock. I've tried trading it. It seems like it's too thin. So it's coming in. If you want to buy it, I guess volume seems to be pretty light. Let's check the volume levels on this puppy right now. Oops. Got a filter on here. I got to remove it. Does anybody know, is there a quick way to remove filters for all of you HGS investor users? Here we go. Volume is running 40.9% below average right now, so it's a kind of a voodoo pullback. If you want to test it, you could, but I would use a tight stop at the 10-day line, 20-day line. This is confluence here. You could give it 1% if you wanted to, something like that. Somebody says shift click. Okay, thanks. I don't use Wanda anymore. I got rid of my Wanda just because I wasn't using it. It's to me it's useless. I mean, well, not necessarily useless, but it doesn't do as much for me as HGS Investor does now, and that's mostly because the guys over there have worked with me to put a bunch of stuff that I've wanted on that's critical to my trading these days, which is much more creative than just going by the old standard rote rules of the 1990s, you know, which I think is all a bunch of BS. You have to move with the times, you have to evolve, you have to grow, you have to, and to me this is all part of spiritual development too, and opening up your eye, your what I call the fourth eye of investing, where you begin to see what the market is telling you. And I think the last couple of years and this year my results are pretty decent, and that's when I started switching and trying to adopt this way of seeing what's happening. And it's all based on a revelation I had when I was in the hospital in August of 2014, I believe, and I had Bill O'Neill came to me in a dream and said to me, the hardest thing to be in the world is what everybody else wants you to be. The easiest thing in the world to be is yourself. And suddenly it hit me like a flash of light, a bolt of lightning. And anyways, I've been using this ever since. And you can see on my chart, I've got all kinds of funky stuff here. And I'm visual, so I made it all visual. Down here at the very bottom, it will project. Come on now, let's see if we can get that. Whoops, wrong box. You gotta be careful, there's so many boxes on here. Okay, you can see, I don't know if you can see this, you guys, but there's a little, you see the red part of the volume, and then you see the green part. That's projecting the volume for the day, early in the day, based on what it's trading now. And so I can see this. What did I do? Did I destroy it? There we go. Okay, there we go. I can see this as it's unfolding in real time visually, not in my head and having to calc it out or seeing a percentage number or whatever. I can just see it. And so I've tried to incorporate more visual aspects to my chart views. And you can get this chart view, I believe, on HGS Investor. So somebody says they got rid of their MarketSmith. Yeah, I mean, $1,000 versus $599 a year for this and $25,000 a year for Wanda. It's almost like, are you stupid? You know, that's the way I look at it. And I think if you're clinging to O'Neill style stuff in the old way, as I call it, you're not moving with the times. And I fully believe that when things become more, quote, normal, which I don't think there is such a thing as normal in the markets, All I know is after the World War II, 1980, was it 82 to 2000, you had a big secular bull market, and every time the market corrected, you just buy again, and there's all these new wonderful names, and the economy was strong. You had the computer boom, you had the internet boom, and everything just kept going. And now you're in a different phase. You're in the age of QE, and the market is different. And but as at the same time, as Wyckoff would say, that's Richard D. Wyckoff, for anybody's going to ask. And if you do look for his books, just read everything. Everybody's always asking me, well, which ones do you recommend I read first? Read them all first. How's that? Stock Market Technique 1 and 2, maybe. I just read everything and read it all as fast as you can. Somebody says, do you know if HGSI will use Interactive Brokers data stream? I'm not sure. There's some talk of that to make it actually real time, because you're about 15 minutes delayed right now. But that, on the data, that doesn't really bother me, because a lot of the screening on Wanda as well is 15 minutes, 20 minutes delayed. So we already looked at AMBA. Let's keep going through my list. I know I went off there for a little while, but I do believe that trading is great, because it helps you grow spiritually and as an individual, because you learn so many things about yourself. And as you expand your abilities, it also allows you to see more in life, I think. So, is it a microcosm of life? Not really, but kind of, but not really. Anyways, let's keep going through this garbage. Mobileye. See, here's one. It's had a nice move. Every time it pulls back into the line here, you buy it, and then you sell it at the top. So you get like $3 bucks, and you do that over and over again, you'll be rich. But maybe it's trying to bottom. It's been a pod, and it was a beautiful pod play right here. I think we talked about it. And then you had another short point right here, and it busted apart here. And now it's just kind of chopping around. Now, given that you had this breakdown, it needs some time to set up again, and I wouldn't be surprised if it rallied into the 50-day moving average, to tell you the truth. So it could. Earnings, I think, come out in November. But if you look at this, what it's starting to morph into, and this will happen frequently with punch bowl of death patterns, which is what this is. I think it's like 21 weeks down, 20 weeks up, or 20 weeks down, 21 weeks up, I forget. But you can start to see now a head and shoulders forming on the right side of the pod. And this is not unusual. You often see a head and shoulders form on the right side of a pod. And when it does, you can now start operating off of the parameters of that head and shoulders. Therefore, where would you want to be shorting a head and shoulders? Well, into rallies at the 50-day moving average, or the high of a shoulder. Now, if you look at this as a right shoulder, these 2 weeks here, okay, then maybe you're at the highs of a right shoulder. So maybe it's shortable here. Maybe it's not. Maybe it goes higher. So if you're going to test it, you would put out your position, you keep a tight stop. If it turns on you, you run away. It's that simple. You take a small loss. So, and I'll do that frequently. So, somebody asks, hey, Dr. K, if MDM goes to buy, would SOX L be a good candidate this time? What do you mean? You mean as a ETF to buy? I don't know. What do you say, Dr. K? I'd short it myself.
There's correlation between these majors. The SOX, understand how the SOX correlates to, say, the NASDAQ or the S&P, to give you an idea, and also know the volatility inherent in it, so you know how to position size it. And yeah, I mean, if all the markets just continue going higher, well, this should track along with the markets. But of course, it's not one-to-one, because it's the semiconductor index. Generally speaking, on a buy signal, if you assume the buy signal is going to work, then you want to be in the strongest indices. So that would mean, generally speaking, the NASDAQ's going to be faster than the S&P. For us, the 2000 is probably going to be faster than NASDAQ, and so on and so forth.
Yeah, I would also say that the SOX kind of gives you evidence that the market's reaching a point of potential resistance. So if it broke out there, I guess that would be a positive. But you're back up to the highs of this range in here. So I don't really see anything here that would tell me otherwise. So that's my general view of the semis, and I'll get to some of those names.
Right, and also note that the model is in cash, because the market's had a pretty sharp bounce here, and it wouldn't be surprising to see the market consolidate these sharp gains. So anyway, right now it's in cash, and that's where it's going to sit until it's even otherwise.
Yeah. And like I was saying, it's very funky, and I haven't made any huge progress. Not like I did in August over the past couple of weeks. You know, it's an inchworm type of thing, a hit and miss type of thing. This trade will work, that one won't. If I can make progress, a couple 3, 4, 5%, then I'm happy. I might drop back a couple 3%, but that's okay too, given how nice August was. But yeah, we'll see what happens here. Somebody asks, let's see, here's a question. From your trading experience, how often is the market behaving like this? Like what? Where there's, oh, I see. Wait a minute. Stocks going up and no good long ideas. It can happen from time to time, and I think you just watch the stock. So, you know, I think you're in, and we've talked about this many times in these webinars. I think you're in a sort of a sideways consolidation that might be similar to the action we saw in late 2007. So you want to go back and study a chart of the Nasdaq in late 2007, and you know, you guys want me to pull this up? If somebody says yes, I will. Somebody says kids don't know what TV is. Mine, watching Netflix. Yeah, it's like that commercial right now. The kid's taking a French class, and the teacher shows an iPad, and the kid points and says television, and then he shows a phone, and he says television, and the teacher's all confused, and because yeah, that's the way it is now. TV is not. There is no TV. It's now all part of the internet. As my son said when he was 5 years old, and chidingly to me, he says, "Don't you know, Dad, the internet is king." Okay. Or if I asked them a question, my kids would roll their eyes at the dinner table, and they say, "Dad, all you have to do is look it up on the internet." What did we do before we had the internet? You know, I don't know. Let's see. Watch Netflix and YouTube constantly. Yeah, there's some interesting stuff, and I like the fact that it's sort of open source. I mean, there's a lot of people putting stuff up that isn't corporate. You know, I think you have big government, big corporations, and big media, and those are the unholy trio that try to control everybody. And as long as it's big profits for them, that's nice. And I like the way the internet tries to break that down. I think Dr. K would agree with me there.
Absolutely. But there's other things that I've been involved in that have been around for a few years, and that's going to make the internet look like child's play by comparison. So
awesome.
Basically, within 15, 20 years, in less than a generation, this whole world is going to look vastly different than the way it is today.
I believe.
I know that's a lot, but it's coming, and there's nothing. I know governments will want to try to stop it, regulate it, etc. But as been shown in some form, they really are powerless to do anything against the onslaught of this technology. So it's an exciting time to be alive.
But they're trying to, as governments will. They were going to resist, but eventually I think the technology wins out. Just like with the Uber thing, you know. Farmer ran a dog. Apple, I think Apple's probably a short here, right at the 20-day line. You know, it's been in this bear range for a while. Here we go. Let's see. Maybe I'll short some right here. There we go. All right, I'm going to short a couple thousand shares here. 113. What are we looking at? What is it at here? 113.31. 113.30. We're filled. All right, we'll see how that goes. Watch, everybody going to short it with me. Knock it down for me, you guys, will you? Let me see. I got to make a couple adjustments here. Give me a sec. And I'll use the 20-day as a quick stop. If it goes through, I'm just going. You know, it's no skin off my teeth. You gotta be, if you're gonna short, you gotta be willing to give up a couple 3%. You know, if you're not, forget it. And it's volatile, and you gotta be willing to let things move a couple 3% against you sometimes, and have some you-know-whats to hang with it. DPZ HNS top. What is DPZ? Is that Domino's Pizza? It's looking a little bit like that. Yeah, you're close, I think. And it's rallied into the 200-day, so it'd be a short here using the 200-day as a stop if you want to do it. The only problem is it trades 679,000 shares a day, which you can do if you're going to short a couple thousand. That would be acceptable in my view. So Yeah, that's a good. It's at least, if nothing else, it's a late stage failed base. Because look, it had a big run, late stage failed base, it failed. You get one rally into the 50 day, you bounce up to day, another one up above the 50 day. You see that how you go past? You have two types of stocks. You have pingers and sliders. Sliders will slide past a moving average. Some of them do it regularly, like Dominos does. You see how it slides past the 50 day over and over again. So it's a slider. And then you get pingers. You know, I think someone was pointing out to me. Bob is not really a pinger, so I would say NXPI was a pinger the other day off the what? No, I guess that one's wrong too. But now it's right at the 50. Maybe that's a short. But the DPZ looks kind of interesting. VMware, that's a pinger. So see how it runs right into 50 day and boom, it just gaps down. So you had to short it right there and then hold it overnight. Now it's kind of chopping around. But it's been ugly for a long, long time. Baidu trying to come up, but you notice how it kind of slides past the 50 day and reverses, coming back down. So you can see how in some cases you can get some juice. Now look at they're pushing Apple on me. That figures. A whole dime. Okay. But you can see how you can scalp these for a few bucks. Workday is sliding past the 50 day. This might be in a short position. I don't know. It got hit yesterday. You can see that, and it got some support off the lows. STX continuing past the 50 day, so there's a slider there. It's a wedging rally, so I'd be looking for it to fail at some point here. And it wouldn't surprise me if it did. So now, the other thing with Apple is if it keeps on, I might put more out. So a couple thousand shares is not kind of like a starter position. But I'll watch it. We'll see what happens. Let's see. STX, NXPI, we looked at that. Facebook, still on my now. No, it's coming in a little bit here off the highs, but I don't know. We'll see. Data, still pretty ugly. Here's Palo Alto Networks, not really going anywhere. It seems more like a short on the rallies now. Alphabet, again, we looked at that one. How about, let's see, did we look at Ulta? Yeah, we looked at that. We looked at Software Toolworks. That's looking grim. They bought a company, and they've been pinging off the 10-day for the last several days. It pings off the 50-day right here. You can see that. And heads lower. And that's looking pretty ugly. Disney is starting to look like a short to me. Notice how it's rallied past 50-day. Now it's coming up to the 200-day. You have a black cross here. And you can see that this pattern, you might say, is you have a left shoulder, a big head, the breakdown, and now you're forming one right shoulder, and I'll bet you that this is the second right shoulder, and if the market rolls over, this is heading back to the downside. I think they're raising their prices again. They like to do that a lot, but yet people go there, and it's like anytime you go there, it's always crowded. That's why I don't go there anymore. Or if we go, we stay at the hotel and get the VIP package where you just run to the front of the line on everything and everybody else is sneering at you. Somebody says, with recent market gains behind us, why did the volatility model switch to buy? Well, you don't know that market gains are behind us, but we have come up a ways. Do you have an answer for that, Dr. K?
Remember, the volatility model is not the market direction model. Volatility model is can be very quick. And sometimes you can get a sharp gain in a matter of half a day. So that's what it's looking for in this actual buy signal it's on, is potentially a quick gain. Now, of course, what I like about the volatility model is that it's like the market direction model. It's self-learning, but it's much quicker in terms of what it does and how it let's say how it neurally processes price data, just because that's its nature, is to be much quicker about it. So given the context of price data, the fail-safe on this particular signal is very tight. Therefore, the reward more than outclasses the risk in this particular buy signal. Now, if it doesn't work, fail-safe will trigger, and your loss should be at actually 1 to 2%. But if it works, then your gains are actually going to be more than 3 to 1, actually more like 4 to 5 to 1, or more than that. So it took this signal on that risk-reward basis. But it's a good question. Gil, can't hear you.
Somebody asked, the indexes appear to be at or close to resistance levels. Yeah, we looked at that on the NASDAQ. So there and there. So, I mean, they're at resistance levels. That's obvious, but does that mean they roll over? Maybe, maybe not. I don't really think you really have to worry too much about whether it's obvious. Just watch what the stocks are doing, and you'll probably get a better idea there. And like I said, it's kind of dicey, and so I wouldn't be surprised if we rolled over from here. That said, you know, you got to monitor the situation and be fluid if you're going to try and test the short side. And if you're on the long side, again, you want to take gains when you have them on the upside. Anyways, let's get back to looking at the stocks. Where were we? Disney, CRM. This one has been on my short sale watches, but look at how it's trying to come up. It's at the highs of the base. So I'm not sure. You got a pocket pivot here. It's volatile stock. Hard to figure out what it's going to do from here. Price line. Here's another one. It's very, very choppy, very volatile. V-shaped moves, you know, coming back up to the highs. I don't know. I wouldn't buy it. Qualcomm. This is one I've been looking at on the short side for a while. It's broken down, but now, you know, it's kind of down there, so I may try and rally. I don't know. Let's see if I can get to some of the ones that I think are in a juicier position. Citrix is talking about putting themselves up on the selling block or whatever, up for sale. So I'm not so sure I'd play with this. It had a nice break here. I remember shorting it here a couple of weeks ago, and I got some movement here, but that, you know, it was a trade again. A lot of this stuff is cyber. You know, resistance at the 200-day and kind of looking head and shoulders-y. I think it's a short near the 200-day, and we'll see what happens. You know, with Palo Alto Networks coming down, FireEye getting blasted, maybe some of these are ready to give it up. I don't know. We'll see. But you know, that to me is where you short the stock. So there are some things setting up in shortable positions. If you want to test them, you can, you know, like I'm testing the Apple. So far, it's just pushing against me about 20 cents now. It's not a big deal. Gilead right at the 20-day, so that's, you know, looking ugly there. MasterCard coming up through the 50-day on light volume. I'd watch to see if it rolls over. This is what MasterCard tends to do, you know, moves up and breaks down, moves up, breaks down. But I just have it on my list mainly because I'm watching to see if that breaks down, because we get to this correlation thing, you know, where you'll start to see Starbucks breaking and MasterCard and Visa and everything will break. So I watch them all on my list as confirmation of when we may be getting into trouble. Citigroup, you know, you see the head and shoulders here? It's almost, I don't know, would you call this it's not really pod-like, it's too shallow, but it is a late-stage failed base. It breaks out. What do you do on breakouts? You sell them and it breaks down, and now you're forming a head and shoulders. You're rallying up into these highs here, but you're past the 20-day and below the two moving averages. I'm not so sure. Maybe you look at something like a JP Morgan. Let's take a look there. See that? To me, looking like it might want to roll over. There's a head and shoulders. So you're seeing head and shoulders formations in the financials. Is that good for the market, or is it bad for the market, or is it meaningless? Do the financials not matter anymore? Going to keep going, and then I'll get to some more questions. Dix is, you know, rallies up to the highs here and reverses. Now it's breaking down again. I think this thing is just forming right shoulders and it's going lower. Just like Lulu, I think. We'll get to that one. Netflix, again, hanging in there. Intel, I've been watching because it's another one of these big stock names. It's continued to rally. You know, it's junk off the bottom. Maybe it rolls back through the 50 days. Now it's up 10 now, so we're starting to lose some altitude on an intraday basis. What's interesting here is I've been putting out shorts. I have levels. I have orders at different levels. So as things rally up, my orders will go off. And I just looked at my screen, and they got me about 142% short right now, just base, and just starting to roll back the other way. As I rally up, I'll be down a little bit, less than 1%, which is actually pretty good. Sometimes I go down as much as 2%. And that's kind of interesting. I wonder if that's telling me anything here, because now it's starting to roll back in. We'll see. And that's the way I work the short side. As they're pushing against me, I just put them out in bits. And if you're doing that, you know, a lot of people want me to tell them, well, if you know, x equals or y equals 2x plus 3, is that when I cover? It's like, if you're putting them out as it rallies and you just get a sense that there's a strong bid in there, then what do? You just kind of back off and you just cover right away. So Celgene running into the 200-day, probably a short right there. Lulu, this one runs right past the 20-day. You can see this is a breakdown from this base. So my first point of resistance would be in this bear flag that it's forming. You know, you saw the breakout. That was premature though. It didn't put in enough time, I don't think. And I think now maybe it's going to roll over. Otherwise, you're looking for it to hit the 50-day. Biogen's been a dog for a long time. I first started shorting it in early August here and got this move. Get another chance here. And you can study any of these. So if you're writing down these stickers, okay, here's the ugliest one. This is the only one we put out a short sale report for, and we've done it twice. The first time we did it right here, okay? And if I'm going to send out short sale reports, I try to be extremely selective. And I want to pick the things that I think are the ripest. I think, and also are more thematic. And I got to think that Tesla is more of a thematic short, because they're coming out with all these new models, and they say they're going to make one, you know, for the common person, and this new SUV, what is it, the Model X or something like that, 130 grand for the base model, is that right? And you're thinking, what the hell are you guys doing? You're not going to get the mass market. You're selling puny amounts of cars relative to other car companies, and so are you really that special, and will you eventually just get a valuation that is typical of just any other car company? And so on that base, I think there's a massive thematic rationale for shorting the stock on a longer term basis. So we come after it again on this breakdown here, and I think we put a report out in here. Said it was a short as close to the 50-day moving average as possible. You got that 5 days ago on Monday. Boom, there it goes. I mean, I thought you could have covered here. You might get a bounce. It just keeps going. And you know, if you're watching this and you're short it and it starts to bounce, you might cover it, or you could hold it. And now that it's broken the 200-day, that becomes your trailing stop. So win right at the 50-day, but you know, this is an ugly pattern, so it's a little bit late in the ball game here. So, anyways, somebody's asking about that's pretty much all I have there. Wayfair. I saw this bottom fishing type pocket pivot here. It's moved up, but I don't know. It's if you wanted to buy it, I guess you would use the 50-day moving average as your stop. If we ever have another economic boom, will breakouts work again? I imagine so, but I also believe that these early buy points are really what you want to be getting in on early, and by the time a breakout occurs, you're either adding or selling into it. Now, if you're in a riper environment where things are not so subject to the vagaries of quantitative easing, then yeah, maybe they will work, and you should see, you know, we get a much better bull market.
Keep in mind
No,
that the pocket pivot concept is something that when I came into it was motivated by the 2004 and I created in 2005, or rather observed it. You don't really create anything; you can observe things when it comes to the markets, but in terms of price volume action. But what I did was I of course back tested it many decades, including the 1920s, and I found that I wish I had pocket pivots in my arsenal back in the 90s because my returns would have been actually appreciably greater, as good as returns were in the 1990s. And that's what I liked about the concept, is because you could use it whether the market is acting properly or whether we're in a very difficult situation like this year has been.
Somebody says, did you say you shorted Apple at 113? I said 111.30. Somebody's asked, here's the last question, and my answer is I don't really need to care about this because I'll see the stock. You'll see the stocks when they show up because it implies a sort of a macro approach to investing that I don't really employ. So, Dr. K, based on your idea of the future looking much different than today, are there any investable themes in your thesis?
No, not at this time, because these things, I mean, we're talking about VC, not even, well, we're talking about a VC level. You know, these are companies that are just barely coming together, and then hopefully pitching the right VC companies to invest in them. But they're not, they're ways away from going public. So, you know, we'll get there. You know, and some of this technology could be, I suppose nanotechnology would be one of the first. But we'll see other technologies that'll start to emerge. We'll start to see a lot of headlines on this exciting stuff, and then from there we'll start to see companies going public. You know, kind of like the internet. You know, the internet used to be the ARPANET, and then there was a lot of talk about the internet in my world anyway, in the early 90s. But the first internet company to go public didn't hit until about 5 years later with Netscape in 1995. So I would expect maybe a similar pattern here. Although the evolution of these new technologies seems to be quicker than the evolution of the internet. So maybe we're going to start to see evidence of this instead of 5 years from now, maybe 3 years from now.
Yeah, and the stocks will be there. So, you know, whatever's happening that's on the cutting edge shows up in the stock market. So they'll be there, you know, when they're there. It's not like you're going to find some penny stock based on some schematic, futuristic premise and make a ton of money that way. You'll see when it happens, and that's really all you need to do is see when it happens. It's that simple. Anyways, on that note, you guys, thanks for showing up, and we'll just see where this thing goes. So have a good weekend, and we'll catch you next week.
So long, everyone.